Hi everybody, welcome back. Another edition of Chat with me, Waylene. Okay, there's a special topic today. No more politics. It's all about finance. Finance, baby. And it's huge news. In the world of finance, big giants are falling over. So let me show you. Citadel and Point72 invest $2.75 billion in hedge fund Melvin Capital. What do these words even mean? Well, let me tell you. Melvin Capital, an enormous hedge fund, is forced to take money from its competitors in order to keep alive. Stabilize the hedge fund, they say, which is really a nice way of saying like stay alive, because it's been hard hit by a series of short bets this year. So what is going on? Okay, let me tell it to you straight. And you may have already heard the name Gamestop, Gamestop, Gamestop. So, Melvin Capital, the hedge fund, which is targeted by Reddit. Ignore the word board, that makes no sense. The hedge fund targeted by Reddit closes out of GameStop short position. So what happened here? Well, GameStop is a games retail store, a chain of game retail stores that has fallen in hard times because nobody buys games in stores anymore. They just download it from the internet. If you have the PlayStation, you get it from the PlayStation Store. If you have Xbox, you get it from Xbox Live. If you play on a PC, you go to some, PC apps for games and you download it off the internet. So who goes to these physical stores anymore? Nobody. And thus, hedge funds like Melvin Capital bet on that, and they short the stock. Now, if you are not familiar with shorting, not to worry, I'll explain it momentarily. But so it suffice to know that it's a financial instrument that allows hedge funds, as well as many investors, actually not the average investor like you and me, but larger investors, people with a lot of money or institutions, they get to do shorting. And so Melvin Capital shorted GameStop, in anticipation of the continued decline of GameStop. So their stock price will keep going down, they'll keep losing money, or not even losing money, just that their business is slowly dying. So in the anticipation of that happening, they want to make money from that situation, that unfortunate decline, and so they short the stock. But unexpectedly, people on Reddit, the social media network, decided to jump in and save GameStop. So, let's see. GameStop, hedge fund's most hated stock, was targeted by an army, I say, of retail investors who marshaled forces against short sellers in online chat rooms. Close enough to the truth. In the Reddit forum Wallstreetbets, with over 2 million subscribers, rookie investors encourage each other to pile into GameStop shares and call options, creating massive short squeezes in the stock. So that's all very technical. Now I'll explain to you what exactly that means. And to that end, I have taken this, copied this screenshot, which has been circulating around. It's really great. I don't even know who it belongs to, but it's perfect. So somebody wrote, I know at least one of my followers doesn't quite understand what is happening in the stock market right now. And that's enough to motivate me to explain, because this is somewhat of a turning point in world history. First, you need to understand what a short is in trading. A short is when you borrow a stock from a broker and sell it immediately at its current price. Then you hope the stock's price falls such that you can buy the stock back at a lower price and return the share you borrowed to your broker and keep the difference. So that's it sounds very confusing to you. Not to worry. Here's an example. So in the example, let's say I want to short company XYZ. All right. So company XYZ is on the stock market, and the stock is currently priced at $10. $10 for one. So you want to perform a short, right? So how does this happen? Well, first you borrow one share. And you normally borrow this from your stockbroker. Your stockbroker will lend you the one share. They may charge you money for it, right? Of course, because they're providing a service. So they'll lend it to you, and then what do you do with the share? Well, it's yours for the time being because you borrowed it. So you can sell it immediately. And because the price is now $10, you sell it at 10 because that's how it works, right? So now you have $10 and you owe your broker the 1 share that you borrowed. So what would you know? By the following day, the price of stock XYZ drops to $7. So now you can buy back that stock XYZ at $7. That's great. You sold it at 10. And then in order to return what you borrowed, you bought it at 7. And so you pocket the difference of $3. So let's say now in this scenario, instead of XYZ's price dropping to $7, let's say it increased instead. You remember that you borrowed the stock, you sold it at $10, and then you waited, but the next day the stock price went up to $15. You still have to return that borrowed share, right? So it's going to cost you more money. You're going to lose money in order to return the share. So you'll have to be forced to buy it at $15 and you'll give it back to your broker. You lost $5. That really sucks, right? But well, it's not the end of the world. You just lost $5. However, that's just an example. In the real world, right, the price can rise indefinitely. Your potential losses as a short seller are unlimited. The more the prices rise, the bigger your losses. So now for GameStop. A few weeks ago, a Redditor on our Wallstreetbets. Our Wallstreetbets is what we call a subreddit. It's like a smaller subgroup within the overall, umbrella network that is Reddit. There are many, many subreddits, and Wallstreetbets is one of them. So a Redditor user noticed that a hedge fund, Melvin Capital, had taken a massive amount of short trades against GameStop. The example we just talked about. So they had actually borrowed shares, they paid up the money, now they're waiting for the price to go down so they can return the shares, and pocket the difference. So the intelligent Redditor realized that, made a bet that they can convince everyone in Wallstreetbets to join forces and buy as much GameStop stock as possible. And what is the benefit? Well, if they buy it, it bids up the price, right? Because the more people want to buy it, the more sellers can raise the price. So it raises the price and raises the price, contrary to the expectations of the hedge fund, because they were expecting to fall and fall and fall so that they can, pocket the difference. They can sell it high and then, buy it back real cheap. But when it went up, the hedge fund was, starting to lose billions of dollars. Their losses even surpassed the $13.1 billion that the hedge fund was worth. At that point of time, they didn't actually technically lose the money. They were in the red. That is, they were on paper, they were going to lose that money. Eventually, this hedge fund had to close their short positions. Yes, they closed some of their short positions and they took some money from their competitors in order to survive, right? Let's see. So this is called, so the hedge fund had to close their short positions, right, and buy all the GameStop stock back to return to the brokers, and that made the price even higher. So what they suffered here was called a short squeeze, right? They had a short position and they were squeezed. So the hedge fund was declaring bankruptcy, and that was why they took in money. And the Reddit thread, the Reddit people are combing through other hedge funds looking for, this kind of similar situation so that they can squeeze them into bankruptcy as well. So a lot of people on Wall Street obviously are very angry, and this user claims that a lot of the Wall Street people are saying the public joining together should be illegal. But just that, really, they're just, having sour grapes because they lost in their own game to the masses. So you may think like, wow, that's crazy, what an insane story. And how can that possibly be true? Well, I dug into a little bit, and that's why I'm making this video, and the truth is more crazy than you can imagine. Let's start here with a story about tech. Discord bans Wall Street bets as subreddit briefly goes private. What does this even mean? Well, Discord is a chat app that gamers use, and of course social media people. The people on Reddit also use this because it's more real time. It's kind of live. And so they created their own Discord server. It's free, and anybody can join. And what happened was the company, Discord, banned the Wall Street Bets Discord server. Now, why would they do that? The Wall Street Bets subreddit, credited with kickstarting GameStop's epic stock run in recent weeks, was taken private by moderators amid a tsunami of so many comments and submissions that we can't possibly even read them all. Discord also took steps to permanently ban the Wall Street Bets channel, citing moderators for continuing to allow hateful and discriminatory content after repeated warnings. So, does that sound right though? Because you know what Discord has? They have gamers. Young, angry, or sometimes, over-energetic gamers who are, and what do you do when you play games? You're competitive, you're fighting to win, and you're out to, role play, have a good time. So what do? You push the boundaries with your language. You can be very aggressive, at least in chat. So being that way on Discord is like one of the most normal things in the world. Young people being aggressive online in their words, bordering on cyberbullying. That's the most normal thing in the world. Why would Discord ban the Wall Street Bets channel for that? And on top of that, it's about finance. It's about money, right? So look at this. The Discord statement goes on to specifically clarify that the move was not due to financial fraud related to GameStop other stocks. Discord welcomes a broad variety of personal finance discussions. Well, what is Wall Street Bets about but financial discussions? Why would a forum devoted to financial discussions, devolve into glorifying violence and hate speech and spreading misinformation? That doesn't have the ring of truth, if I could say that. So that's very fishy. And that's not all. That's just the start. The head of NASDAQ president, calls on regulators to manage the situation after Redditors drive up GameStop stock. The president of NASDAQ has called on financial regulators to step in after a group of Reddit users drove up the price of GameStop stock. Why? See? Okay, NASDAQ president Dana Friedman suggested that additional regulations may be necessary to prevent retail investors from coordinating social media. Doesn't that sound kind of insane? Why can't retail investors coordinate on social media? Why must that be prevented? And what does it mean to say manipulation is manipulation? Well, if I am a hedge fund and I have so much money that I can drive up or drive down the price of a stock, which is exactly what Melvin Capital wanted to do with GameStop stock, then does Adena Friedman believe that manipulation is manipulation and that we should stop this from happening? So this doesn't make any kind of sense whatsoever. Is it because individual people? Is it because using social media to coordinate is wrong? This doesn't make any sense. So to me, it doesn't sound like there's any solid case here. But again, that's not all. So former presidential candidate, for the United States, Elizabeth Warren, tweeted on the topic, with stock soaring while millions are out of work and struggling to pay bills, it's not news that the stock market doesn't reflect our actual economy. Yes, I agree. I agree with you, Elizabeth. For years, the hedge funds, private equity firms, and wealthy investors dismayed by the GameStop trades have treated the stock market like their own personal casino while everyone else pays the price. Yes, I hear you. Retail, big investors have often made a lot of money, while being considered too big to fail, right? It's long past time for the SEC and other financial regulators to wake up and do their jobs. And with a new administration and Democrats running Congress, I intend to make sure they do. What does she mean? For the SEC and financial regulators to wake up and do their jobs. So she means that there should be more regulation? So on the one hand, she says these hedge funds, private equity firms, and wealthy investors treat the stock market like their own personal casino. That's terrible. It hurts the regular people because these big firms, are making so much money, and when they run into trouble, who bails them out but the taxpayer, right? And then in the last tweet, she goes, "Oh, so it's long past time for the SEC and financial regulators to do their jobs and start regulating." But regulating who? Because the ones is she talking about regulating away the losses of Melvin Capital, or regulating away the profits of the retail investor from Wallstreetbets? Very fishy, Elizabeth. Very fishy. I don't exactly know what you're talking about here. And that's not all. It's crazy. GameStop trading could be systemically wrong, sorry. State regulator says. So the top securities regulator in Massachusetts thinks trading in GameStop stock suggests something is systemically wrong with options trading surrounding the stock. I highlighted here William Galvin, Secretary of the Commonwealth of Massachusetts, said, "This is certainly on my radar. I'm concerned because it suggests that there is something systemically wrong with the options trading on this stock." What is systemically wrong about options trading on this stock? Please say, Mr. Galvin. But alas, the paper, the outlet, the website, Barron's, is awaiting further clarification from Galvin about what specifically makes the trading problematic. Exactly. So there's just all kinds of what I consider craziness that is being seen here. The NASDAQ CEO and president, Massachusetts state regulator for securities, Elizabeth Warren, all talking about regulation, all talking about how this situation is unacceptable, all talking about the dangers. And why is it dangerous now, right? And here I think this one gives you, this final example I want to show you gives you a really good flavor of what's going on here. CNBC, the business news network, a guest called out an anchor accusing him of siding with big investors over average Joes in an epic marathon clash on the financial network. This happened on CNBC's Fast Money halftime report, as anchor Scott Wapner interviewed Chamath Palihapitiya. So Chamath, a super famous guy, tech whiz, was very heavily involved in, I think, if I'm not mistaken, Facebook's ad platform creation. So super smart guy, and now a prominent investor. So they were talking about it. But to summarize, GameStop set off a panic among many traditional Wall Street types. Yes, indeed it has, and you can see it in the nature of the reporting, that I was just sharing. It's, I think, insane. So, is it a case of massive market manipulation requiring government intervention? What? No. Or are average investors coming together and simply beating Wall Street at its own game? And I think that's pretty obvious, right? So they debated the topic on Wednesday, with Chamath suggesting that the CNBC anchor's interests side not with the small investor but with the hedge fund behemoths. Wapner argued that the stock is primed to crash and called for regulation to protect small investors. So Wapner is the CNBC host, but Chamath wasn't buying it. Don't all of a sudden look at a short squeeze where money is being made by retail and say, hey, there could be and maybe the bag holder in the future, so let's make sure they can never participate in the future. That's crazy. Yeah. It's extremely hypocritical, right? To advocate, so as the anchor, the host, to say, oh, no, look at this, look at all this risk here, all this risky behavior happening, this stock, will definitely crash in the future, which is very possible, of course. All stocks can crash. And we need regulation today, to make sure that these small investors, like you and me, they don't lose all their money, their hard-earned savings. So we got to regulate them and stop them from participating. That's essentially, so I think I'm paraphrasing. Yeah, I didn't say that, Wapner replied. You are saying that. I don't want to say Palihapitia all the time. So Chamath, that's the implication of what you're saying. Well, if Wapner was indeed arguing that, regulation is needed to protect small investors from losing their shirts, which means like keeping them out of the game, then yeah, that's exactly what he's saying. I'm not saying they shouldn't be able to participate. You're saying they should participate on your terms with the appropriate regulation. No, Wapner shot back. On Wall Street's terms, in a way where when Wall Street can have the best of it, they can maybe participate on the side. But when Wall Street gets the worst of it, their parents, their relatives will just come in and bail them out. Woo. Spicy exchange. So I will share, this link as well as all the other links in the description. So if you want to follow up on any of this, please check out the description. Wapner denied the charge, saying that he was merely calling for a hazard sign, right, to warn small investors so they don't get into trouble. So Chamath argued that any regulation targeted at small investors must also apply to the big hedge funds, who in the case of GameStop, would have been shut down by a watchdog for short selling 140% of the company. So yes, actually, it turns out that the Melvin Capital was taking extremely risky positions. They're extremely risky. So when you short sell, right, and if you do it in the example that I mentioned, that's called a naked short, because you have no protection. You're totally exposed. If the price of the stock goes up and up and up, your losses can be unlimited. They just keep going up, and no matter how high the price goes, you have to eventually buy it back and return it to the broker, right? Or declare bankruptcy and you're out of the game totally. So if you want to be in the game, if you want to stay, solvent, you want to have actual money, then you have to, at some point, accept the loss, buy back the stock, and then give it back to the borrowed stock, right, to the broker. And so they were so their position was so risky, they just did it. They didn't have any hedging, any protection. And yeah, Chamath said that, well, they would have been shut down if they were doing things like that, which was so reckless. So he continues, you can't all of a sudden have your cake and eat it too, right? Yeah. Let's have hedge funds operate in the shadow, but then let's basically lambast, Wallstreetbets because they have the courage to write their stuff down publicly where anybody can see it, which is actually exactly true. So if you are not a Reddit user today, but you wanted to see what has been written about by the Wallstreetbets people, you can just sign up for Reddit. You don't even have to sign up. You can just visit Reddit, search for Wallstreetbets, and you'll see it, and it's all there. In fact, I will show it to you. But let's just finish up here. Almost done. I'm not lambasting anybody. I'm glad these people are making money. That's the way it should be. Let's face it. No, you're not. And that's the issue, because the rules are changing underfoot. People don't like them. Wow, that is super spicy. But entirely entirely reflective of everything that I've shown you in this video. Everybody is talking about more regulation, talking about keeping a close eye on things, talking about yeah, how terrible it is that this is happening, and shutting down, chat groups like on Discord that have nothing to do, nothing to do with finance at all. Anyway, let me take you now to the heart of it all, to Reddit. Here we are. Wallstreetbets. So you can see here in the URL, this is reddit.com/r/wallstreetbets, and you can see like these are the top posts from the past week on Wall Street Bets. Number one, a New York Times article saying that the Securities and Exchange Commission is reviewing this subreddit, and what is going on? That's crazy. And then second one, and this is the nice thing about Reddit, people are they show a great deal of appreciation. And it says here, can we all take a moment and appreciate the moderators or mods here who have grinded through this and held our community together, because the mods really have to make sure that everybody plays by the rules, doesn't use bad language, no exposing personal information, all that kind of thing. They keep things together, keep things civilized. GME YOLO update. I really want to show this. Let's see if I have it prepared somewhere. No. So let me show it to you. The YOLO update. So it's just somebody talking about how things have went for them. As you can see here, everything is green. Everything is green. Their total gain is 4,420.98%. That's how much they're up. And their portfolio, or at least, as far as GameStop is concerned, is now valued at $13.8 million. So whoever this is, username deep effing value is up. Yeah, $13.8 million. Total insanity, of course. The one who started it all. So going back to the top. Oh yeah, AOC. Something preach. More GME YOLO update. Let's see who else is making money off of this. Oh, again, it's deep value. So this is the guru now. He is the guru, or she is the guru for the whole Wall Street Bets. And let's get a little bit of the flavor of the rest of what's going on here. Let me show you. Hooray for Charles Payne! The shorts have had their way with the market for decades and no one has ever complained about it. So I am thrilled that individual investors are playing the same game, and now you, big hedge funds, are losing, says Charles Payne, obviously a commentator on Fox Business. Everybody loves that. 80,000 people have upvoted this. And this was posted just mere 9 hours ago. And so that's really reflective of what's been going on. Okay, but where is all this going? So let me show it to you, because people have been talking about this as well. GME is the Gamestop stock ticker abbreviation. So this is what some say is the end game. Okay, this is not deep effing value. This is Thick Dad's Club, username Thick Dad's Club, saying the bull thesis. Okay, just explaining. To date, the GameStop play has been pretty simple: buy and hold, wait for the squeeze, whether that comes in hours, days, or week. Try not to have a heart attack and buy, baby, buy. So it's rapidly becoming apparent that we'll soon enter the GME endgame. Blah 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 blah. You can have, one of 4 exit strategies. Maybe you don't care at all about GameStop's balance sheet, or Cohen, the CEO's planned turnaround. You bought a couple of shares on a whim, and to be part of a unique movement. You don't intend to be a long-term GameStop shareholder, nor do you really care if you miss out on the highest peak, so long as you make a few dollars and say you're part of the squeeze. Yeah. So just, how does this exit work? Pick a number between 0 and 3 and multiply by 128. So, and then submit a limit sell order at a certain price. So just make a quick buck and get out. An exit strategy 2, pants shitting fear. So you had a handful of shares and you're up big. You have a lot of money on paper already. You don't know much about squeezer or fundamentals or Greeks, like alpha and beta, and gamma and all that kind of thing. And every time there's a dip and the stock gets halted, you shit your pants and your finger hovers over the sell button. So there's a strategy for every kind of investor. In this case, exit strategy 3, diamond hands. Like you'll never give in. Exit strategy 4, just follow the madman, follow the lead, follow the Pied Piper, follow him. So there's a lot of good thinking here. I actually really like how the thinking goes and how the explanations are given. And that's not even the end of it. There have been follow-ups. Somebody else wrote here, username Fat Aspirations, writing here about more about the CEO, more about the thinking around it, Delaware General Corporation law, and so on and so forth. So yeah, Cohen's not an exec, he's a founder of an all-in mentality. So really pitching the stock, the company. So there's a lot of thought that you can see that there's a lot of thought that goes into some of these posts, right? And there are actually people with a great deal of brain power on Wallstreetbets very often. And my favorite is actually here, Endgame Part 3, again by username Fat Aspirations. So Fat Aspirations has a lot to say. Say recap of what happened thus far. Why did GameStop go up on Friday? There's some speculation about why did GameStop come down? If everybody in Wallstreetbets is continually buying and buying and buying, well, why did it come down? So username Fat Aspirations was speculating that market makers took a non-neutral stance and actively began shorting the stock. So market makers are investors so big that they're given special treatment by the stock markets. I read the same explanation that we're looking at now. So he believes that market makers were invited to participate, or not invited, rather decided to participate, and they started making their moves, buying and selling and putting their options in place. See, a new opponent enters the ring. So the investors into Melvin Capital Management are, according to Fat Aspirations thinking, now involved in this situation. So it may be that Melvin Capital did not totally close all their short positions, but now that Citadel and Point72 join in, they can help to buffer Melvin Capital's positions so that Melvin Capital can still eventually make some money back, not lose so much. So it's very speculative, but very interesting and thought out, and with a lot of observations being shared. Yeah, so that's what I wanted to share with you. All right, so I've already gone through all the material I prepared. Once again, you've seen how it began, how it's going, what are the movers and shakers and thought leaders thinking, how are people clashing about it on air, and as well as what are the posts that you've seen on Reddit, what the actual hot posts are on the topic, and where are some of the thoughts leading in regards to the end game for this whole situation. So covered all. I hope you enjoyed everything that I've shared. If you want to read more, check out the links in the description. If you enjoyed the video, please do the thing, like it. Really like the video. Appreciate it. Very heartfelt. If you like what I the kind of material that I'm doing, please subscribe. I'll be patient. I'll wait while you do it. And that's all I have for you this evening. I hope you enjoyed watching as much as I enjoyed talking about it, and I'll talk to you again real soon. Bye bye.